The Accunet Mortgage and Realty Show is sponsored by Accunet Mortgage, an equal housing lender, NMLS ID 255368, and Accunet Realty Advisors, which is a separate company from but still affiliated with Accunet Mortgage.
Putting a roof over your head without the headache. Get answers to all of your home buying questions. This is the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
And our Sunday best to you. Good morning. Welcome to the Accunet Mortgage and Realty Show. I'm Steve Kettler. Along with Accunet Mortgage managing owner and senior vice president Jerry Serketich and licensed millennial loan consultant David Wickert. As always, if you have a question, you can reach us on the Accunet Mortgage talk and text line. That number is 414-799-1620. Good morning, gentlemen. Good to see you again, Jerry.
Hey, good to be back here, Steve. Great to be back in studio here with David, and looking forward to a fun hour here. A lot to share. David, why don't you start out?
I was just going to say it was a busy week in the mortgage and interest rate world. I swear Janet Yellen has to keep a thesaurus next to her anytime she speaks in public, because here's what's got the interest rate market working this week and this next week. Quote, "A further adjustment of the federal funds rate would likely be appropriate," is the exact wording that drove the futures market to, Steve, we were talking, it was north of 80% on Friday. It's only 79.7%. So it came back just a little bit. That come the Ides of March on March 15th, they're going to raise the federal funds rate. So the drumbeat continues to get whacked, and it's getting whacked louder and louder and louder. It was a busy week last week for economic news, and this coming week it's going to be a busy week as well. I was joking with Jerry. We thought the jobs report was going to come out on this past Friday. In fact, the Bureau of Labor Statistics, they wanted an extra week. So that's coming out this Friday. But it's just interesting to note that there continues to be good economic news, and that's all the reason that the Fed needs in order to get to at least the first of what they hope is 3 rate hikes here in 2017. So Jerry and I were bouncing this back and forth. What does that mean for either home buyers or folks who are looking to refinance? And we were just saying the difference in the monthly payment, Jerry.
Yeah, not as much as you might think, but it's just we're going to cover that in just a minute. Let's just talk a little bit about before we get into a little bit more of the economic news, some of the other things we're going to hope to get to during the show today. We've got the 6 things you need to know if you plan to buy your first home in 2017. This is an article that we found by a Forbes contributor. This list of 6 things you need to know, preferably before you start looking. So we'll cover those. David, what else do we have?
I want to get to, we've got an awesome article on our blog about the 5 pitfalls, the 5 mistakes to avoid when you're writing in the contract to buy your next house. And that's in addition to stories from the front lines. We've got a couple good stories about gifts of equity, interesting listing agents covering their eyes before they put a home on the market, and how that impacts things down the line. So
Right. 17%, Steve, of consumers unaware that mortgages involve blank. We'll get to that, too, and that question. I think the answer is going to surprise our listeners. If time permits, we also found an article on bank rates, 7 ways home sellers turn off home buyers. Some are obvious, some not so much. That could be fun. The rate roundup, of course, we'll get to sometime around the bottom of the hour. And, of course, your calls. If we're anybody out there, calls related to the mortgage, real estate industry, we'd love to cover those. So, David, let's get back into the economy now.
I was going to say, so we're going to take our first break here at 10:14. But when we come back, I want to talk about what that means for interest rates, and then we'll dive into the 6 things you need to know if you plan to buy a house here in 2017 when we come back.
Right here on the Accunet Mortgage and Realty Show on WTMJ.
Home buying advice from the guys who know it best. This is the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
Well, the Brewers continue Cactus League action against the Colorado Rockies this afternoon. Bob Uecker and Jeff Levering have the call from sunny Arizona. Our coverage starts up at 1:55 today, sponsored by your local Chevy dealers. David Wickert is with us. Jerry Serketich with us this morning here on the Accunet Mortgage and Realty Hour. So we're looking at interest rates and, beware of the Ides of March.
Right, you bet. So it's going to have a real impact both on home buyers and also anyone who's thinking about refinancing. So example number one is if you have a home equity line of credit and the Fed raises rates on March 15th, your home equity line of credit is going to get more expensive starting April 1, and that is not a joke. So that's thing number one. And did I mention the Fed wants to raise rates 2 more times after that? So your HELOC's not going to get cheaper between now and Christmas.
That's right.
And the second thing, so point number 2 is anyone who might have an adjustable rate mortgage, an ARM, the index that is likely tied to is probably not the Fed funds rate. But since interest rates generally move together, if you've got an ARM that's probably going to adjust sometime here in the next 12 to 24 months, that adjustment is probably going to get a little bit steeper by itself. So that's thing number 2.
And this upward pressure on rates, like you said, will lift the index that your ARM is tied to, whether it's the LIBOR index
or
the
just
Treasury
related
index.
to.
That's right.
And then thing number 3, we were doing the math for what does this mean for home shoppers. And the real difference, if it's just a quarter in rate, you're trying to buy the same house and rates are what they are in March versus maybe they're a quarter higher a month or 2 from now. That's a monthly payment difference of $30 a month, which is not the end of the world. But I think the real dollars and cents is if, let's say, your monthly payment is strapped at a certain maximum. If an interest rate goes up, it means there's $30 that you have to pull back on how much mortgage you can take out. I'm going to say this a different way. If this month you could get a mortgage for $200,000, but the rate goes up 0.25% a month from now, 2 months from now, that means you can only get a mortgage for $195 if you are truly kind of limited on what your monthly payment can be. Right. So again, Aunt Janet continues to bang the drum that interest rates, they're going to start here in March in all likelihood, and they're still going to do it 2 more times. So if you've got that home equity line of credit and you want to get it on a fixed rate, now's the time. The train is in the station, and the conductor is walking down. It hasn't left yet, but we're getting pretty close.
That's right. And while $5,000, like David said, your purchasing power may erode by $5,000, where you may have been approved up to $200,000. That now gets brought down to $195,000. Doesn't sound like a lot, but in an environment where we're seeing home prices gain in appreciation, could be a double whammy. And so something to just think about as we're in an environment where rates are creeping up. Let's get into segment 2.
Yeah, so I was going to say, when we come back from this break, I want to get into those 6 things you need to keep in mind if you're thinking about buying a house here in 2017. When we come back, Steve.
Right here on the Accunet Mortgage and Realty Hour on 620 WTMJ. You're listening to the Accunet Mortgage and Realty Hour here on WTMJ. Jerry Serketich with us and David Wickert with us. And now the 6 things you need to know if you're going to buy your first home here in 2017.
You bet. So not to sound like a broken record, but thing number 1, mortgage rates have risen since this time last year. We were looking, literally rates are 0.5% higher than they were in March of 2016. So you just got to be aware that, like, hey, it's still a great time to go buy a house. It's just they're not as ridiculously low as they were this time last year. Thing number 2, Jerry.
Thing number 2, rising trend of single people buying homes. And this, Steve, interestingly or traditionally, most waited until they formed that household with a partner, put things together, bought a home. Finding that's not the case anymore. Turns out that looks to be an outdated norm. Been a real uptick in the number of singles purchasing homes. And in other words, making the decision to become homeowners, take that step regarding their finances, independent of deciding to settle down with a partner.
You bet.
So, interesting.
So thing number 3, if you're looking to buy a property, cities are still the most likely place to buy. And I think we're seeing this in, I know in Tulsa it's that way. I think on the North Shore, good homes are going quick. And so location continues to be the most important factor either if it's your primary residence or if there's an advertiser here on the station, even if it's for a rental property, location matters. So that's thing number 3. Thing number 4, Jerry.
Indeed. Number 4, you need to be able to afford more than just a down payment. And while down payment requirements are lessening, we have 3% down payment available, 3.5%, even as little as 0 down if you qualify based on income restrictions, certain things. However, what many don't realize is beyond the down payment, there are things like prepaids for mortgage interest. There's a home inspection that a buyer is going to pay for.
Right.
Escrows that need to go into a property tax and insurance escrow account. A lot of things to think about. All the more reason it's important to get with a lender early on, not only for pre-approval, but to help walk you through and guide you through this process so you're not surprised.
You bet. So thing number 5 is look at your entire financial picture. I think it's really interesting, the conversations that I'll have during the week with folks who I can approve them for more mortgage than maybe they're comfortable taking out. And I think that's just a personal preference. Where is that best balance point between, yes, you technically would qualify for more, but that doesn't mean that you have to. And I think, that's not anything that any loan consultant can decide for you, but it's something that we can help you understand. It's like, well, the classic example is like, honey, let's go buy a $250,000 house. Well, what does a house look at $255 or $260? And you start to get that creep. Understanding how it all fits into your financial picture, we can kind of lay out all of those options, tell you what the top end is, but then maybe work backwards to get to that comfort spot. And thing number 6, Jerry.
Yeah, real quickly, just to piggyback on that, though, David, and this is something I think we do really well at Accunet as a group of our professional loan consultants, is we really do consult those home buyers. And part of what we do that's really key to what David was talking about is asking for a payment target.
Right.
What payment do you believe as a new home buyer is going to fit within your budget? How much per month do you think you can allocate toward that monthly mortgage payment? And then we can back into
right.
Exactly. What does that mean in terms of purchase price based on your down payment? What price range do you need to stay at in order to hit that target? So really important, David. It's a great point, and I think something we do really well. And I again can't emphasize enough how important it is for a new home buyer, looking to buy here this year. Talk to a lender. Give us a call with the free mortgage checkup. We'd be happy to talk through those options with you. Number 6, get more than just a second opinion. This kind of gets into getting connected with a lender, professionals within the industry. It's really important to get with a lender, for example, that will be reliable, knowledgeable, and is going to be willing to take the time to walk through with you and guide you through this process, because it's a lot to consider, David. I mean, you go ahead.
I mean, my bad joke is no one goes to mortgage class in high school or college, which is totally okay. Maybe that's the 6.5 thing of the 6 things you need to do in 2017. The half thing is confess to yourself that it's okay if you don't know. And I think, Jerry, as you pointed out, what we try to understand is sometimes I say we interpret the hieroglyphics that can sometimes be in the mortgage world. So, again, the earlier in the process we can connect to try to just make sense of helping you feel comfortable, the better off we're going to be. So, to recap, the 6 things that you need to do if you're going to buy a house here in 2017. Don't forget, rates are up from last year. There's a rising trend. If you're a single person, absolutely you can go out and buy a house. Number 3, location continues to matter. If you're going to write an offer on a property in a hot part of town, you got to be rock solid pre-approved. Number 4, don't forget, it's more than just the down payment. It's a conversation about the other items that go into buying a house. Number 5, make sure you understand how it fits into your whole financial picture. Just because you can buy a $400,000 house doesn't mean that you want to. Maybe $250,000 is your maximum. And then number 6 is don't forget to go out there and get a second opinion. So when we come back from the bottom of the hour here, we'll do a rate roundup, and then I want to get into the 5 purchase contract mortgage mistakes to avoid when we come back here from the bottom of the hour.
Important home buying questions and answers you can count on. This is the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
And in for Brian Wickert today is Jerry Serketich, and David Wickert is with us as we're now getting ready to focus in on the 5 purchase contract mortgage mistakes you want to avoid.
You bet. Happy to give you the day off, Dad. Hope you're listening. All right, thing number 1, tip number 1. Please don't say bad things about the property in writing unless you want the lender, Accunet, to force you to fix them before closing. We see way too often when a buyer is seeking a price reduction or a closing cost credit, probably after the home inspection, and we've seen language that kind of goes like, quote, because of the rotting wood on the front steps and the cracked, chimney liner, both of which are defects and safety hazards, seller will pay $3,000 of buyer's closing cost. Sorry, we're going to have those items fixed before we close, because if you draw attention to those material things, we're going to have to make sure that the property's in good condition before everyone's sitting down at the closing table. So it's as simple as, please write the language that seller will pay, in this example, seller will pay $3,000 of buyer's closing costs and prepaids. That's a slam dunk. It's as easy as that. I had an example this week, Jerry, of a buyer's agent who sent in an amendment with that exact language, and I leapt for joy. I called her. I said, Katie, thank you for having an amendment that is clean and without extra.
Right.
Which is, I don't know if that's a low bar, but it's just, that's all you need to talk about. So anyway, all right, Jerry, thing number 2.
Yeah, there's a saying, less is best.
Right.
And the fact of the matter is, just real quickly, these are items that are going to be repaired. The fact is, though, that the seller and buyer have agreed that, okay, we're going to give you a credit. Mm-hmm. You're going to repair these things after closing.
Right.
And so, we don't want to have to accelerate that on you and force those things to be done prior to closing.
Correct.
All right, tip number 2. Provide your lender with all amendments right away.
Not just some.
Not some.
Yeah.
Not most.
Yeah.
All.
Right.
Every. Many times, unfortunately, and we're still surprised that this happens, we get this amendment out of nowhere a day or two before closing.
The surprise amendment.
The surprise amendment. And this has been in place for sometimes weeks, and for whatever reason doesn't make it to us. And in most cases, we can deal with this. It's something we can manage, but it's, as anybody knows, it's always more difficult and not nearly as comfortable. There's a lot more anxiety when all of a sudden something's coming up and we're scrambling at the 11th hour to try to remedy it. The good news is, in most all cases, we're able to. But let's try to
nice to not have to do the fire drill.
That's right. Get those to us early and often.
All good things. All right, thing number 3. Please don't include chattel, C-H-A-T-T-E-L, chattel, which is otherwise known as personal property, in the real estate offer. For some, I don't know what convention it was, but real estate decided that it's perfectly okay to include things like the washer and dryer, refrigerator, microwave, oven range, all that good stuff. Those things are, I don't know, heavy enough that it's harder to move, and maybe that's why they're not chattel. But if you include things like the pool table or the lawnmower or the furniture in the contract, 99 times out of 99 times, a mortgage lender is going to ask that those things be removed. And I was joking with our colleague Kevin this week. It's because if you collateralize the lawnmower, I could just go over to your house and drive away the collateral that I'm using for your mortgage. And so those things can't be included. If you want, you could complete a bill of sale. If you wanted to formalize those things being included, you could complete a bill of sale in tandem with the contract that you have, listing out those items, and just note that they are for $0. And I'm still surprised that things like the pool the pool table's heavy. I get it. Maybe you don't want to move it. It's just it can't be included in the contract itself.
Right. Yeah. The servicers, Fannie doesn't want that being made part of the valuation that an appraiser is coming up with when they're appraising that property.
How do I adjust for the pool table? Is it $5,000? Is it $10,000? Anyway.
Exactly. Tip number 4. Encourage all buyers to get moving on their mortgage as soon as the offer is accepted. This doesn't happen often, but when it does, it can be a really big problem. Some buyers often first time, who haven't been through this process before, just don't understand that financing and appraisal contingencies, those deadlines, the clock starts ticking on those deadlines as soon as the contract's accepted. So if you wait until after a home inspection's done, by that time we could be 15 days into a 30-day finance contingency. We haven't even ordered the appraisal, maybe taken that formal loan application yet, so really puts us behind. And again, it's a scramble, and nobody likes
scramble.
Nobody likes the anxiety when we're having to put on the full court press and push for things to get done very quickly.
You got it. All right, when we come back from this last break, we're going to give tip number 5, and then I want to dive into a rate roundup, and then we'll dive into some stories from the front lines of mortgages and real estate when we come back.
Accunet Mortgage is an equal housing lender and MLS ID 255368. Thanks for listening to today's show. Hey, if you'd like to get started with a no social security number required refi checkup, a second opinion, or a rock-solid pre-approval to buy, all you have to do is click on the blue button at Accunet.com. That's ACCUNET.com.
Jeff Wagner for CertaPro Painters. Spring is the perfect time to spruce up your home's exterior, and now is the time to get your project on CertaPro Painters' spring schedule before it fills up. Look, take a look at your house. Do you see chipping, peeling, fading paint? Well, if so, the experts at CertaPro can make your home look brand new again. Now, I've used CertaPro Painters for both interior and exterior painting at my house, and I could not be more pleased. They did a fantastic job for me, and I know they'll do the same for you. They showed up on time, they performed their work on schedule, and they cleaned up after themselves. CertaPro is celebrating its 25th anniversary this year, and they're inviting you to experience the CertaPro difference. Get on their spring painting schedule today. Call 800-GO-CERTA, that's CERTA with a C, 800-GOCERTA, or check them out online at CertaPro.com. That's why CertaPro Painters says, we do painting, you do life. Each CertaPro Painters business is independently owned and operated.
Find a place to call home without the headache. This is the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
The Milwaukee Admirals moved into a new home this year, which led to millions of dollars in upgrades to the UW-Milwaukee Panther Arena. Team owner Harris Turer discusses the move, the financial investment he made, and how he feels about the pending Bucks Arena during our WTMJ Conversation Show. It's all coming up at 11:07 this morning. Jerry Serketich in for David Wickert, Brian Wickert this morning. David Wickert also with us. Are we going to grab a quick rate roundup here?
I want to do tip thing number 5, and then we're gonna do a rate roundup. I'm the tease, and I'm sorry about that. But thing number 5, okay. Thing number 5 for purchase contract mortgage mistakes to avoid. Thing number 5, if the buyer is putting less than 10% down on a condo, allow 45 days for the financing contingency if possible. Condo is not a swear word at Accunet Mortgage, but when you are putting less than 10% down on a condo, we have to dive in for what's called a full review. Not a half review, not a quarter review, a full review. Because what we got to look into is the health of that association, of that condo family. And so we get to gather cool things like bylaws and budgets and reserve studies if available and insurance documentation and complete a questionnaire. And that's totally fine. It's better to have more days when you do that than not enough days. Condo is just that extra layer of good documentation that we got to put in front of underwriting to make sure that everything looks good for your condo family. So again, real estate and mortgage lending is a team sport. So, the better we know, the more that we know, the better we're able to collaborate and help our clients. So those are the 5 things. That's on our blog at Accunet.com if you want to go read those for yourselves. Make sure we avoid any of those potholes. All right, Jerry, we'll finally stop teasing them. Let's do a little bit of rate roundup here for what the world looked like on the end of business on Friday.
Sounds great. All right, I'll dive in here and get started with sharing with everybody Freddie's weekly surveyed rate that was established last week, Thursday, and that's from data that's collected, I believe, Tuesday and Wednesday, so
correct,
early to middle part of the week last week. Freddie's weekly surveyed rate came in at 4.1%, essentially right on top of where it ended last week. Mm-hmm. Very, very close. That requires a half a point. So on a $200,000 loan, that would be $1,200 on top of the traditional costs to cover things like appraisal and closing fee and so forth. Mm-hmm. So Accunet wound up last week on the 30-year fixed right at that same rate on a 30-year fixed with an APR of 4.159. However, that would require 0 points at Accunet as of Friday of last week, which means total costs of somewhere around $1,100 versus as much as $2,300 to $2,500, the national average.
Oh my gosh! So you're saying there's not a paper shuffling fee that we include there or anything like that?
Not at Accunet.
Not yet. No, I'm looking forward. You know what I'm looking forward to is March Madness is coming up, and I've started to say to folks on the phone, hey, there's probably going to be a lot of advertising from some large online lenders, and I'm looking forward to just everyone thinking to themselves, someone has to pay for all of those commercials, and it ends up being you if you end up buying a house or refinancing through some of the guys who are going to, ding you for an extra $1,000, $2,000, $3,000. If you want to light $2,000 on fire, by all means. But at low overhead Accunet, we're able to get by without charging the paper shuffling fee.
That's right. It leads back to getting a second opinion.
There you go.
If you wind up talking to one of these large lenders, you talk with somebody who's quoting you these higher, $2,000, $3,000, $4,000 in fees, be sure you check with Accunet. Click on the blue button, free mortgage checkup. Take minutes to help you understand your options.
You bet. And what did the 15-year end up at? I've talked to a lot of people who think about shortening up.
Yeah, 15-year, and this gap has widened a bit, David. Typically, we see a gap of maybe 0.5% between the 30-year fixed and the 15. It's at 0.75 of a point currently, and that's in large part because as the upward pressure that we've been seeing mount on rates,
right,
that's more impactful on those longer term mortgages because there's more rate exposure there.
Correct. Over
a 30-year term. So the 15-year ended up at 3.375%. Again, 0 points. That APR 3.427. So yeah, a 0.75 point from 4.125 down to 3.375 if you're able and willing to shorten that term to 15
Well,
years.
and I think as Dad and I have talked about, if you're maybe approaching retirement and you want to get that mortgage, paid off between now and when you stop working, or you want to take advantage of the lower rate. I mean, the reason why the 15-year fixed is lower is because the lending world knows they're going to get the money back in half the amount of time.
That's right. That's right. And then ARMs are also looking more attractive now. The adjustable rate mortgages, 10, 7, 5-year ARMs, a nice alternative for some who may not have that long-term outlook. Don't like the idea that the 30-year fix maybe has crept over 4% just slightly. You still get any of these adjustable rate mortgages starting with a 3. The 10-year was at 3.75, no points, with a 3.877 APR.
Wow.
The 7-year, 3.625. Again, fixed that rate fixed for that full 7-year term. An APR 3.854. So,
as I've said to some folks who maybe they'll get sense here in the next couple years and move down to someplace warm after they get tired of winter, so maybe the ARM's the way to go. All right, when we come back from this last break, I want to talk about a seller that I talked to who's going to be listing their home for sale in Wauwatosa, and talk to her about the rock-solid pre-approval that she should keep an eye out for anyone who might be making an offer on her home when we come back.
Expert advice on buying a home. Here's more of the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
In for Brian Wickert today, Jerry Serketich, David Wickert with us as well, and as usual on this Sunday morning. So that rock-solid pre-approval, such a key part of the equation.
I appreciate that, Steve. So, had a conversation with a home seller, actually, on Friday, and she is going to be purchasing a condo down in Chicago. And the nice part is she owns her Wauwatosa home free and clear. So kind of her game plan when all the dust settles, what she wants is to own her new Chicago condo free and clear, which is totally awesome. And so I said, absolutely, let me connect you with a partner of ours that could maybe provide that interim financing. But what I got excited about in having a conversation with her was the perspective that she needs to bring when she starts to field offers to buy from buyers who want to purchase her Wauwatosa home. So in probably the next week, she's going to list her home for sale in Wauwatosa, let's say around $600,000. And, between her, me, and the fence post, I was like, I'm willing to bet, because of how thin inventory is, especially if the house looks nice, she's probably going to have an offer pretty quick. But what I proceeded to point out to her was that not all pre-approvals are created equal. And so I had fun talking with someone who's going to be listing their home for sale, because obviously we talk to buyers all day long, and that's what we talk about a lot on the radio show and in any of the 60-second spots that Dad runs through the week. But there's still something to be said when you are going to sell your home. And so what I pointed out to her was, who do you want writing an offer on your home? Do you want the person who went to, mortgage.net and just told the calculator, oh, yeah, I make $100,000 a year and I got, $20,000 in savings. Yeah, I just told you so it must be true. Or do you want the person who kind of put on their adult pants and went through the good documentation that allows Accunet to give you a rock-solid pre-approval? And so I said, when you start fielding those offers, look at the fine print. What did the lender document or not document? Because the sticking point is not in the credit score. The credit, that's clicking a button, we get the report back, and it is what it is. Where the devil is in the details is in your income and in the down payment itself. The income, hey, let's point to the pay stub that you're going to use to continue to make this mortgage payment. And the down payment is, hey, where's the money coming from to purchase the home? That's part of the process that we got to do anyway. And so when you're fielding offers as a seller, the one that is stronger, that shows someone who's done that homework, is going to make it easier, or I'm going to say less stressful, less scary to accept that offer versus someone who kind of just writing an offer because they just got a pre-approval off the internet. I mean, isn't that okay?
Right, David, because like you said, the devil in the details, it's not so much just getting the pay stub, because the pay stub is that source document.
Sure.
But it's the analysis and review of that pay stub to determine, are you being paid hourly? Is it salary? Are you commission? Is there bonus? Is some combination thereof?
Right.
That's important. It's not just simple enough to just show, here's my pay stub, here's what I earned last week or last year. It's how you earn that is critically important to the underwriting process. Really important to review that up front, so we're not surprised by the fact that maybe you did just start earning commission 6 months ago on top of your hourly rate.
Right.
And that could be a real challenge. So yeah, can't say enough how important it is to go through that process, and we love doing it. We continue to get great feedback from home buyers who are out there in the market.
And real estate agents too. I mean, when they're presenting those offers to even their seller, they're kind of documenting. It's like, okay, well, this person did their homework, and this person kind of did their homework. Maybe we should talk to the person who did their homework, who might be ready to actually buy this house.
Right, and the home buyers, real estate agents, on the working with the home buyer and the listing agents alike, love the fact that how streamlined and smooth the process goes when somebody has been rock solid, pre-approved, because of the fact we've already done that homework. So we're getting ahead of the game.
We're starting on second base. It's baseball season, so we're already starting on second base because we've already got that good documentation.
Right. We talked about the importance of those contingency dates. It allows us to really get ahead of those and meet not only the appraisal contingency date, but the important finance contingency date, in most cases well ahead of that deadline. Everybody loves that. Again, nobody likes the anxiety of coming up to the 11th hour.
Right.
Hey, is this loan going to get approved?
All good things. All right, some good topics today, Jerry. I think we did Brian proud, so maybe he'll take next week off too. We'll talk. We'll see. Anyway, so if you want to get started with your rock solid pre-approval, or if you're thinking, man, it's about time I refinance because Aunt Janet continues to bang the drum on raising rates, all you got to do is go click on the blue button at Accunet.com. That's ACCUNET.com. Steve, we'll see you next week. It's been a good one.
Yeah, thanks, Steve.
You got it. This has been the Accunet Mortgage and Realty Show on 620 WTMJ. Colleen Boland joins us next from the WTMJ 24-hour newsroom.
The preceding was a paid program. Advice and opinions expressed during the Accunet Mortgage and Realty Show are solely that of the hosts or guests of Accunet Mortgage and Accunet Realty Advisors, and not WTMJ Radio or Scripps Media Incorporated.